Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. It's a mixed start to trade for the Asian markets. Yields on U.S. Treasuries were at a 4-week high after inflation there came in higher than anticipated. Oil prices rose to a 7-week high as a potential hurricane over the Gulf of Mexico impacted supplies, along with a drop in crude inventories in the U.S. IndusInd Bank will be the first major lender to report its first quarter earnings today. This will be its first earnings report post the merger with Bharat Financial. Infosys also will be reporting its June quarter numbers today. Higher wage costs are likely to impact the company's margins, as was the case with TCS. And England beat Australia by 8 wickets in the second semi-final of the ICC Cricket World Cup. They will now face New Zealand in the final on Sunday. Well, it was a mixed trading session on Thursday for the US markets, with the Dow Jones Industrial Average ending above 27,000 for the first time. Also, the S&P 500 ended at a record near the 3,000 mark. Investors continue to remain skeptical on the state of the economy, though, after Fed Chair Jerome Powell's testimony. Ranita Young of Bloomberg News tells you what happened in that trading session in this report.
U.S. equities ended mixed on Thursday as the Dow Jones Industrial Average closed above 27,000 for the very first time, and the NASDAQ was a little bit lower, but the S&P 500 actually ended near that 3,000 level that it broke through briefly on Wednesday and Thursday. Investors are still wondering about monetary policy and the state of the U.S. economy after listening to testimony from Fed Chair Jay Powell on Wednesday and Thursday. Now, meanwhile, we did see the U.S. dollar lose steam versus major currency competitors, and treasuries also lost a little bit of steam and energy there too. However, we did see that core consumer inflation in June actually topped analyst estimates. It was hotter than expected, and this really potentially complicates the Fed's assessment of inflation as it considers a rate cut very soon. Now, meanwhile, we did see quite a few movers that was in the health industries, particularly drug makers, sinking after the White House backed down from a plan that would have pushed to remove rebates paid to Medicare and Medicaid sponsors. Eli Lilly sunk around 4%, so did Merck, but we did see health insurers and pharmacies actually increase, with Cigna shares surging more than 15%, as well as CVS, which jumped around 8% at some point during the session. And that's a look at your Thursday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right. Well, let's have a look at the Asian markets now, just to close the loop on international markets. Rosalind Shin is joining us live from Bloomberg's Hong Kong studios. Morning, Rosalind. From what I can see, there's a lot of red on the screen, and there's just one spot in the green. That's the Kospi in South Korea. How's it looking?
You're right. It's pretty lackluster today, and veering towards, yes, going to be perhaps more markets in the red by the end of this session, closing at the end of the week. Some of the shine coming off, after the positive performance yesterday. And, we are seeing a little bit of cat among the pigeons since President Trump did send out a tweet complaining that China hasn't met its promise to buy more agricultural products. So that, of course, highlighting some uncertainty there, some concerns, being refueled again about the global trade situation. Now, we are waiting for some numbers out of China. The trade data is expected at some point today. Bloomberg Economics saying that they saw a sharp deceleration in exports starting in April. They're expecting the situation in June not to be much better, and the months ahead also to look pretty grim as well. So that data on China trade going to be coming out at some point today during the session. Xinhua, we did report that Liu He did say that pressures on the economy are normal, and China is going to continue to expand its opening up. We're expecting also some data out of China on Monday, which is its second quarter GDP data. So investors will be closely watching these numbers to see, how the state of play is in terms of how the trade dispute is going to be affecting China, and of course the impact it has on the global economy. It's slightly related to that. We had some numbers out of Singapore as well. Its second quarter GDP reading showing the economy contracted the most since 2012. Exports there continuing to plunge. Singapore's economy is very, very heavily reliant on trade, so it's of course very vulnerable to any of these this rocky situation in the trade situation globally. We saw that the economy declined an annualized 3.4% in the quarter versus the first quarter, against expectations of a 0.1% increase. One economist told Bloomberg they thought the numbers would be bad, but this is ugly. So that situation now, of course, pertaining to the whole global trade situation. And in Japan, we're seeing the Nikkei and the Nikkei actually just about flat. The Topix is losing 0.12% right now. More investors turning bearish there on Japanese stocks even before the earnings season has started. And we see BlackRock and the likes of DBS Group Holdings as well. Those are the latest institutions to lower their weightings on the country's shares. They're saying issues like the stronger yen and also the fallout again from the US-China trade war impacting that situation. Earnings outlooks essentially are what a lot of investors are turning their focus to now, because they are souring globally. So across the board here, the MSCI Asia Pacific down less than 0.1%. The Kospi making gains of about 1/3 of 1%. Hang Seng up by 0.14%, but really looking pretty mixed for the session so far. Back to you.
Thanks so much for that, Rosalind. All right, now let's talk a little bit more about what Rosalind mentioned was the key talking point overnight. Trade tensions between the US and China have resurfaced just days after talks between the two nations resumed. President Donald Trump has complained that China has fallen back on its promise of purchasing more farm goods from the US. A promise which Trump says that he secured from Chinese President Xi Jinping at the G20 summit in Osaka. China, however, says that no such promise was ever made. Sarah McGregor and Selena Wang of Bloomberg News bring you this update.
This was sort of the big takeaway that Trump took from his meeting with President Xi Jinping a couple weeks ago. You know, China agreed once again to increase purchases of agricultural goods. And I think, you know, this is a really politically sensitive area for Trump. He's heading into re-election. Of course, he wants to make those farmers happy. He's given them aid, you know, but still, I think, you know, the soybean purchases plummeted after the Chinese-U.S. trade dispute opened up. And that really sort of ruptured a key support base for Trump. So coming out of this meeting, it was a really big deal for Trump to tout that. And then we heard from him today, you know, that in his view, China has not increased those purchases. And we had some data backing that up as well.
But Selena, the problem, of course, is the fact that there's nothing written down, right? There's no official document, and China doesn't seem to agree with the president's assessment. What are they saying?
We're hearing from the China side that they denied making any explicit commitments about purchasing more agricultural goods. And in Bloomberg's reporting just a few weeks ago, they said that China was considering these purchases as a goodwill gesture. They hadn't made any promises, and that the size and scale of their purchases would really depend on how the talks progress. So no specific commitments. That's what China is saying. But at the same time, we're hearing some positive measures from the Ministry of Commerce. We heard from the spokesman recently that China is willing to restart talks, and they're hoping that there will be some resolutions made on Huawei, but we still don't know when or where those negotiations will start. But again, hearing a lot of pessimism from Beijing about the prospects of reaching a deal in the short term. In fact, yesterday I just interviewed the National Committee on U.S.-China Relations president, who said that his view is that the positions have really hardened on both sides since talks broke down. And despite this temporary trade truce, there's a lot of core issues that they need to work out, and agricultural purchases is just one small part of it.
Let's turn now to the Indian markets. Darshan Mehta is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Darshan. The highlight this week has been the selling by FIs. That continues to be the case. And we're hearing now that it's going to be harder for them to take that option that some of the tax officials were talking about in terms of converting to a corporate structure. So that pressure might just continue, right, at the end of the week.
Yeah, so that is evident in the mid caps, but if you see the Nifty again was up in trade yesterday, and that's because, you know, 10 or 12 stocks are continue to do well, and they are driving the Nifty higher. So almost 40 of them probably will give you negative returns, but 10 will do that, and that's what exactly happened in trade yesterday, because it was the HDFC twins that moved the rally. If you see what happened in trade yesterday, first of all, the SX Nifty is indicating a slight negative outlook currently, given that the US ended strong, but somehow Asian markets are are rather flat in trade. Now the Nifty was up 85 points. The Nifty mid-cap and small-cap end of the market also did manage to rally. Pull up the PSU banking index, and that one did well, led by SBI, and the Nifty Bank was up almost 0.6%. Now basically, if you're looking at how the ADRs ended up in trade, all of them ended with a positive bias. Dr. Reddy's was up 3% given the positive news that came in from MNEL. Infosys, Vedanta, Tata Motors, all of them rallying in trade. The only one that didn't do well was ICICI Bank, which over the past few days has been seeing a little bit of selling pressure. The other factors we see FI flow. Again, they continue to sell 317 crores selling, and DI has bought in almost 720 crores in the cash market. Now, if you take a look at what contributed, again, it was the HDFC twins, SBI, IndusInd Bank that contributed. Remember, IndusInd Bank will have numbers today. ICICI continues to bleed, and TCS post the numbers has been looking rather weak. So that's the trend that we saw in trade yesterday. However, the F&O markets panning out in trade. The F&O currently is the future markets are trading at a discount. Yesterday, open interest was down 5%. Short covering was seen on the market. Similar case with the Nifty Bank. Open interest was down 3%, and there was short covering that was seen on the market. Now, if you take a look at where positions are being built, again, we are close to the 11,600 mark in trade call writers. So there is resistance that is coming in at higher levels, but from 11,600 to lower levels, there is also ample support that is there. In terms of what happened in trade yesterday, at higher levels, positions were getting squared. Put writers are taking positions at lower levels and call writers at higher levels. So that's something that we saw in trade yesterday. In terms of the India VIX, you saw that VIX was down almost 8.5% given the fact that the market did manage to rally in trade. Some of the other stocks that we need to watch out for, PCR moved up to 1.24 from 0.84. Let's pull up the Bank Nifty PCR. Okay, we don't have that. So Dewan Housing, Reliance Capital are in the F&O ban at this point of time, and IDBI and Reliance Infra. Reliance Infra had news of its own yesterday. It's in the F&O ban. Some of the stocks that we need to watch out for in terms of high open interest build-up. Yesterday, Bata saw fresh open interest build-up of 28% on the short side. Interglobe continues to bleed. BHEL was down in trade. REC and PVR continue with their good run. In terms of short covering or long unwinding, you saw that there was short covering that was seen on the auto space and auto ang space. So yesterday you saw Hero MotoCorp see short covering, open interest was down, counter managed to rally, and similar was the case with MRF. So that's the broad trend that we're seeing in the market.
Thanks so much for that, Darshan. All right, let's have a look at what's making headlines across the globe. Selena Wang of Bloomberg News brings you the first word headlines.
The United States is holding off imposing sanctions on Iranian Foreign Minister Javad Zarif, at least for now. The Treasury had been expected to punish him as part of the wider crackdown on Iran amid rising tensions in the Gulf and the shooting down of an American military drone. It's not clear why sanctions have been paused or if they might be imposed in the future. New figures show the population of the California town destroyed by wildfires last year has shrunk by more than 90%. 11,000 homes were destroyed and 85 people died when the blaze swept through the town of Paradise in November. It was the deadliest U.S. fire in nearly a century. A state survey in April counted just over 2,000 residents, down from almost 27,000 in 2010. France is refusing to bow to U.S. threats and is pushing ahead with a planned tax on big tech. French lawmakers passed a bill to impose a 3% levy on global tech companies, which have more than $800 million in worldwide revenue and digital sales of about $30 million inside France. Washington says it's examining the tax to see if it targets U.S. companies and has hinted at tariffs in retaliation.
Et je crois profondément.
We can and we should solve our differences without threats. France is a sovereign state. It will make its own decisions and it will carry on making its own decisions.
Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang, and this is Bloomberg.
Moving to earnings now, the second largest IT company in India, Infosys, will become the second to report June quarter earnings today. The tech giant is expected to report steady revenue growth and maintain its growth guidance for the full year. Margins, however, are likely to be under pressure. Agam Vakil is standing by with what the markets are pricing in.
So seasonally, the first quarter is supposed to be a relatively strong one for the Indian information technology sector, and it may not be very different for Infosys either. In terms of expectations, we are likely to see about 2.5% growth in dollar revenues. In rupee terms, we're expecting a 1.3% uptick. We are certainly expecting a contraction in EBIT margins coming in at around 20.5 against 21.4%, and net profits consequently could decline by as much as 8.5% to around 3,737 crores. Now, in terms of the top line, we do know of the several deals that the company has signed over the past 12 months, and that is something that will continue in this particular quarter too, where we are expecting a constant currency growth of around 3% quarter on quarter. Now, the company has guided for a 7.5 to 9.5% in terms of revenues in constant currency for the full year, and the street is not expecting the company to change this, at least at this point in time. We do know that there has been some sort of volatility in the retail segment, and we've seen some weakness in TCS when it comes to the BFSI segment. But on the other hand, Accenture has reported some strength there. So it's going to be mixed cues when it comes to Infosys specifically in terms of the BFSI vertical. But it is the margins which are going to be important for this company. As we have seen in the case of TCS, Infosys will also see a contraction in margins, and to a certain extent this will be because of wage hikes as well as higher visa costs. Let's not forget that the rupee has appreciated against the US dollar, and that may also work against margins in this particular quarter. But partially, this may very well be be contracted by the cost control measures and high utilization, which will partially offset contraction in margins. In terms of what we are keeping an eye on, of course, is going to be client budgets. We have an idea from Gartner as well as ISG that there has been a slowdown in legacy businesses, and that is something that we will ask the management to. We're also keeping an eye on development of proprietary software, something that Infosys has been talking about of late. On the whole, we're expecting strength in revenues, but also contraction in EBITDA margins for Infosys.
Sticking with earnings, IndusInd Bank will kick off the banking sector earnings today, but more importantly, the private sector lender is expected to report consolidated numbers with Bharat Financial post the merger completion this month. Shefali Malik tells you the key areas to watch out for the bank.
IndusInd Bank will be the first bank to report its earnings this quarter, and this quarter is important for IndusInd Bank as this will be the first quarter that they'll be reporting the merged numbers for along with Bharat Financial. So what we are factoring in is a net interest income growth of about 34% at about 2850 crore rupees, and profit expected to jump by about 20% on a YOY basis at about 1235 crore rupees. However, because of the merger, the numbers won't be comparable on a YOY basis. Also, we'll be looking forward to the margins figure because they'll be important to look forward to, as the book of Bharat Financial, that is a high yielding one. So on that count, the margins may get better for IndusInd Bank. Provisioning also will be very important to look forward to, as the bank may make higher provisioning for some of the stressed accounts, especially they may make more provisioning for IL&FS exposure that they have. So because of that, we'll be looking forward to the guidance that the management gives as far as the credit costs are going forward. So these are some of the important parameters that we'll be looking forward to, along with the loan growth, which is expected to be around 33% on a YOY basis, deposit growth around 28% on a YOY basis. Treasury gains as well are expected to boost the non-interest income this time around because of the fall in the bond yields, because of which, as we know that bond prices and yields are inversely related, so bond prices may jump up, so because of which we can expect some treasury gains to come in, and we look forward to the CV portfolio as well of the bank, whether that has seen any sort of impact because of the auto slowdown.
Speaking about the auto slowdown and the consumption theme that everyone seems to be talking about, Temasek is looking to invest in India's startups as they find more growth opportunities there. India co-head Ravi Lamba spoke to Sajid Mangat and told him about their bottom-up approach to investing and why half of their India portfolio is focused towards financial services.
I think we are, firstly, to step back, we are very bottom-up focused on our investments. So we will look at investments on a bottom-up basis. What does that mean? We do not allocate money to any geography or any sector globally. So it's entirely bottom-up. So where we see value, we will put capital to work. India, we see value. We see positives in India. We see positives along policy reform. We see positives around the economy, digitization of the economy. We see, trends playing out in India that we like thematically. For example, the sharing economy, also connected world. That's playing out well here. There's the urbanization that goes on. The middle income population spending power going up. So all of that, from a macro perspective, we see good tailwinds that tell us that India is a good area for our capital to find a good destination. Now, when it comes to finding good opportunities here, we are obviously focused on good management, and we are focused on finding businesses that differentiate. And we've been putting $1 billion a year for the last 5 years, as you rightly said. We are at 11 billion now, which is it's all-time high. We're at 5% of our global portfolio, which was 313 billion as of March 19. Which also is a record high for India exposure. And I dare say, as we go forward, could we put more capital here? Answer is absolutely yes. Are we focused on it? Yes.
Even if returns are going to be slow to come back?
So when I talk about a low growth environment, I talk about a low growth environment globally because of rates, because of cycle, etc. So economic cycles and because of uncertainties and volatilities, all of that put together, we are saying there's going to be we're heading into a low growth environment, and we're not the only ones saying it. This is a broad consensus. But when it comes to finding opportunities, obviously we're trying to find opportunities that are not growing slowly. We're trying to find opportunities that are generating alpha in our equity. And India as a destination, we find plenty of opportunities to look at. So no, we're not targeting to put capital in India because we're targeting to put capital in India because we see growth coming out of our investments in India, and it's not low. We're talking at a normal sort of spreads over cost of capital.
One of the startling thing about your India portfolio is that more than 50% is in financial services in India. And when I compare it to your global sector allocation, it's around 25% in financial services. What makes you bullish on financial services, especially in India?
Yeah, it's a great question. I think, in the early days when we set up our India business, a lot of our investments went into telecom and the banks. We saw both those sectors as a proxy for growth of the economy, banks more so. So if you think about banks, we see them as a proxy for growth. And that's typically how in China, we did the same thing. We first went into the banks. Then each specific sector below that, below the banks started developing and maturing. So we could go directly into that sector. Healthcare developed, FMCG developed more, retail developed more, technology developed more, so then we can get direct exposure. So we have exposure in the banks, in China and in India for that matter, and we started investing more in the underlying sectors. As they mature and they become more, what I would say, ripe for investment, we can put capital directly. Until then, we are happy to play the economy through the banks as a proxy. China has moved far along that. The early growth companies, the startup businesses in China, etc., are further ahead. So we've been able to, for example, circulate more capital into those and play the growth of China in that respect. In India,
you have 26% exposure to China.
Yes, 26 exactly. So almost 5 times of what we have in India. But more importantly, in India now, we're seeing last 4 or 5 years, we've seen the startup economy as an example getting to be a lot more interesting, a lot more opportunities. So now we're putting more capital there. So I think it's a journey. So we have not targeted to say we want to be more infinite banks in India. It is just bottom-up built. As we see the opportunities, we keep growing the portfolio.
Let's turn now to the stocks that you have to watch out for in trade today. Darshan Mehta is back to tell you about the stocks in news. Darshan, what's on your list today?
Yeah, so in terms of result, Den Networks was the only one that came out with numbers. Revenues were flat on a year-on-year basis. They actually reported a profit of 11 crores versus a loss of 31 crores. And that was on account of a higher other income this time around. They had 51 crores of other income this time around. EBITDA was down 11%, which means a contraction as far as the EBITDA margin is concerned. Basically, the saving grace was the cricket season, and that drew up the cable business. But the management did not disclose the cable and broadband business ARPU as well as subscriber count. KPR Mills becomes the first company after the budget to withdraw the buyback because of tax implications, and that is is something that they've done. Cox & Kings, again, one more rating agency, that is CARE, has actually downgraded the long-term debt facilities to a default rating. HFCL wins a 200 crore order from Bharat Electronics for the supply of optical fiber cable, and Gravita India will be in focus. They start commercial production from the Tanzania plant. They expect 20 crores of revenues and 15 crores of gross margins to come in from this plant in FY20.
Thanks so much for that, Darshan. All right, here's an interesting discovery. A 210,000-year-old skull found in Greece may be the earliest sign of modern humans outside of Africa, according to researchers in a public research university located in Germany. Take a look.
It seems that this early expansion was actually earlier than we originally thought, and that it reached all the way into the European continent, which we did not suspect before. Did they meet Neanderthals? Were they able to interbreed with them? We have, for example, some suggestions from ancient DNA, genetic evidence, that there was an ancient interbreeding event between Neanderthals and the population related to the ancestors of modern humans. Could it be that this is what we are seeing? Also, what enabled these early expansions of humans? Were they linked to climatic events or technological developments? These are all questions for future research.
And we'll of course wait for the results of that future research. In the meanwhile, let me take you through a few stories that you'll find on the website bloombergquint.com. First up, the government wants the Securities and Exchange Board of India to delve deeper into the Indigo promoter dispute and probe the role of all board members and every entity associated with Rakesh Gangwal and Rahul Bhatia, the co-promoters of Interglobe Aviation, which of course controls Indigo Airlines. And sticking with aviation, the Tata Singapore Airlines run Vistara has announced that it will now fly to Singapore starting next month. It will operate 2 daily flights to the Southeast Asian city-state, one each from Mumbai and New Delhi. That's all you need to know going to trade today. Do stay tuned though, there's a lot coming up on Bloomberg Quint. Thanks so much for watching.